Hello, my name is Elsa Clara Massoc. I'm an assistant professor in international political economy at the University of St. Gallen in Switzerland. And I'm very happy to be here in Florence, to be back here in Florence to talk about my recent work called The Political Economy of European Banking, Strategic/Tragic Banking in Europe. Today I'm going to talk about something that has really mattered for my work, and it's actually a research that I started while being here in Florence. And it's about the political economy of banking and how banks are should actually be perceived as a dimension of state power. This paper that I'm presenting today is co-authored with Mareke Beck, who is an assistant professor in international political economy at the University of Warwick. And we came up quite quickly with this idea that European banking should be described as strategic banking, but also tragic banking, in particular after the great financial crisis. So we start from this sort of puzzle that despite, political calls for breaking up too big to fail banks after the crisis, and despite numerous regulations that have been implemented both at the domestic levels but also at the European and international levels, European banks, global European banks, are still very large and are still very interconnected in the global financial markets. So why is it so? If I am to break down between strategic banking and tragic banking, let's start with strategic banking. Why is European banking strategic? European states, and in particular the executive branches of European states, have constantly and very strongly supported the integration of their domestic banks into international markets. And they've done so very actively. And why have they done so? So this is based on my previous work. They've done so for reasons that are actually often overlooked by the conventional literature in CP and IP, which is that global banks are part of geo-economic outreach, sovereignty, and competitiveness. So global banks are part of actually a dimension of state power. So this is strategic banking in the sense that European banks have been politically supported to kind of be part of the interconnected global markets. But this turned to be also tragic banking. Why? Because something that is also quite often overlooked in the IP literature, there is a hierarchy in the global financial markets, with the dollars at its top. And while this hierarchy, the consequences of this hierarchy is often explored regarding the global south, in particular in the context of green transition and development finance, this also matters for European banking. European banks are not just part of the rich world, they're also part of a hierarchy, and they have sort of a position that is near the top, but not at the very top of the global financial hierarchy. So we developed this concept of extroverted financialization, which means that European bank has been financialized, marketized, which is quite widely documented in the literature. But this marketization is quite specific to European banks in the sense that they are extroverted in nature. They depend on getting access to short-term dollars liquidity. What has been happening is that while deepening their financialization, European banks have also sort of deepened the structural dependence over the US dollars, for which they compete with US banks from a structurally disadvantaged position. When we look at the evolution of large European banks on the global markets, and for instance, like their low profitability, this is quite revealing of the structural struggles of the European banks that cannot reach this level of competitiveness that they try to reach through deeper marketization and financialization. But tragic banking is not only at the global level, it's also at the domestic level. For a long time, European banks have been sort of considered, perceived as a very essential piece of growth models, of national growth models. But actually, what the growth model theory cannot explain is that these banks, being Santander in Spain or Unicredito in Italy or the largest French banks, so across very different growth models, they have developed similar business models. This financialization, this extroverted financialization of European banking also prevents them from fulfilling the traditional functions that they've fulfilled in like these older sort of, institutional complementarity of their political economy. And this is often overlooked by the literature, the fact that European banks are not fulfilling these traditional duties, in particular, for instance, in Germany, funding SMEs, in France, funding national champions, but also SMEs. These traditional functions have been actually substituted. There has been substitution for banks by, in particular, public finance and non-bank finance. So actually, what's happening is that, to kind of summarize the argument of the paper, is that there has been a strategic banking, politically supported financialization of European banks, but that has turned into tragic banking, both at the global and at the national level. And so this raises the question for future research, but also for policymakers, what to do with banks that are globally non-competitive and domestically non-useful. And in the context of the green transition and also like of a geopolitical Europe, what would be the banking sector, the European banking sector that we would need to support a proper European growth model?